I thought we could kick off with the Shell debacle, as it would be for the Dutch, or maybe the Shell victory for us here in the UK. Very interesting story, and I think it definitely goes against a lot of the Brexit, the anti-Brexit narrative about how once Brexit happens, all these big companies are going to flee from our shores. They're all going to go to Frankfurt and Paris and things like that. And here we have the fifth largest company in the world, which of course has always had an Anglo connection ever since it was incorporated, I believe in 1907. But now Shell is going fully incorporated in the UK, which is a very interesting move. What are your thoughts on that, John?
Well, I mean, look, this is not strictly about Brexit. You need to step back a little bit, and you have to consider the way in which Anglo-Dutch Shell was set up as a company with two domiciles, effectively, the same way Unilever was for many years.
Right.
And the thing, though, is that when you're a publicly listed company and you pay dividends and you're in a jurisdiction domicile that has a withholding tax on dividends, now that won't affect domestic investors at all, that is within your home jurisdiction, but it might affect international investors who might not want to pay the withholding tax or not receive the full dividend because of the withholding tax and have to go through some process to claim it back as a foreign investor. And it complicates the way in which you structure your share classes and your ownership. And so Anglo-Dutch has multiple share classes. There are those from which dividends are withheld and those from which dividends are not withheld. And it's simply a more expensive way to govern a business, right? To have it set up. And so given that Brexit has occurred, it kind of almost gives them an excuse. It's not as if they couldn't have made a decision before to fully domicile in the UK, but it almost gives them an excuse to review their corporate domicile. And they've chosen to go with the simpler structure, which is only available to them if they completely domicile in the UK, which is to have no withholding tax on dividends in any of their share classes. And so from the perspective of the international investor, that makes Royal Dutch Shell a simpler company in which to invest. There's not this potential complication of dealing with the withholding tax at source. And so, it's only indirectly Brexit related, but in the same way that Unilever has decided to retain its UK presence, here you have, Royal Dutch Shell choosing to actually, they're going to drop the Dutch part of their name as a result of this. Anyway, it's about simplification, which at the margin, and I stress at the margin, there's not too much in it, simplifies corporate governance and simplifies the ability of international investors, regardless of domicile, to hold the stock without any additional bureaucratic nonsense, red tape to deal with.
Right. Thinking of that, when you think of if you didn't know what dividend withholding tax was, and maybe you could expand on that for those of us who aren't massively into the taxation side of the investment and financial world, John. But is this a straw that breaks the camel's back, or is dividend withholding tax just the one big issue that has finally pushed Shell out of the Netherlands?
Well, again, that's kind of what I'm getting at. It in of itself, it's actually not that big a deal. However, other factors equal, it does allow for a simplified corporate structure. It does make it easier for international investors, be they institutional or private, regardless of their own domicile. It makes it easier for them to invest in the company. And so, in the UK, I mean, the UK made this decision a long time ago, way back in the 70s. The UK decided that it wanted to be what is effectively an offshore financial center. They don't call it that, but it kind of is. And they removed all withholding taxes on dividends as well as coupon payments on bonds. And this, of course, enables the creation of the euro market. So corporations can also issue bonds listed in London, denominated in any currency, that do not have any withholding tax on their bond coupons. And that really supercharged the City of London's future vis-a-vis continental Europe, which to this day, it's not just the Netherlands, right? But basically all countries have some form of withholding tax on dividends, and therefore are not places in which international firms, multinational firms, choose to list normally on their exchanges unless they are themselves domestic multinationals.
It's a very nuanced topic when you think of it like in those terms, John. Um, Thinking of it from a governmental perspective, there was an effort from the Dutch government last minute to try and stop this from happening, right? To get an amendment to the dividend withholding tax bill, as it were, in order to keep Royal Dutch Shell. And this makes for terrible optics, right? You are the government that lost Shell, and you can't even claim to be oblivious to it because you did make a last minute attempt to try and save it. I mean, what's the thinking behind dividend withholding tax in the first place, other than just a source of government revenue? And how do you think things got to this point where the Netherlands lost what is something of a crown corporate jewel?
Yeah, well, keep in mind, I mean, look, I don't want to downplay the size of Royal Dutch Shell. It's one of the largest corporations in the world, but it's also just one corporation. I mean, there is more to the Dutch economy than Royal
Than
Dutch Shell
Shell.
being listed there, seeing as how very few of their actual activities are there, with the exception of the refineries at Rotterdam, which are amongst the largest in Europe, I believe. But in any event, the fact is, governments like withholding taxes because they are very low cost to administer. You know the source of the tax, in this case, the company paying the dividend, and you collect the tax at source, one source,
Yep.
rather than trying to then collect it from investors, of which there might be millions potentially on the other side of receiving that dividend and saying, okay, you need to now pay tax on it. From a central government administration point of view, withholding taxes seem easy. They seem easy to administer, cheap to administer, so they naturally gravitate towards it. But, and it's a big but, if you are trying to attract international investors who might be domiciled in countries where there is no tax on dividends and have a tax treaty with the Netherlands where in theory they can claim the withholding back so that there is tax equalization, then they don't like that. They don't want to have to jump through that hoop. So anyway, I think the Dutch government realized too little too late the importance of the international investor to Shell, which seems a bit odd given that this is one of the most international companies in the world and has been for an awfully long time.
Yeah, I wouldn't want to be a member of the Dutch Treasury right now. I think it would, it must be pretty hard to live that down, being the government that lost Royal Dutch Shell to the Brits after all.